I know you guys are here to hear about the VC ecosystem mainly, right? So that's the most exciting part. It's been an unprecedented year. Last year was really good, $1 billion, which usually is an indicator that this sector has matured, right? Has become a real outlasting sector. It's not a spur of the moment, but it's held up, right? And then you have a lot of these trends which are helping shape the economy as well. Now, today, a lot of what we're going to be discussing is how do you create a brand which outlasts us? How do you create a real institution in the F&B space? And does that make it more attractive from a venture capital standpoint? What is happening in terms of M&As in this sector? And what do we need to do as a brand? And obviously, the people that we're going to be listening to are people who've done this journey themselves. They have been able to a large extent, build institutions. And one of our guests is going to be talking from an investor standpoint, saying what is it that they look for when they look for an organization that's actually going to do this journey. So I know you've come to hear from them as compared to me. So I'm going to start off with a question from the other side, which is specifically to Hari. Hari, you've been part of the journey of many brands. You've spotted them early. But before we can kind of get there, it would be great if you're able to tell the audience what are the trends that are shaping this sector?
See, India, can you hear me? Okay. See, India is a very large country and we've got, we're almost like 2 times of Europe in terms of diversity in food and, so many things. So I think today everybody is looking at, category leadership, especially from the investor side. Are you in a category where you can lead, at least become the top 3 in that space? And do you have the team and the, and the bandwidth to scale across the country, right? So I think there are 2 things which I would say, every region has got some very special brands, which have been there for a long time. But today, having seen how Domino's has dominated or created a market with so many restaurants in the country, we do see that there is a huge potential in India, especially for brands which can, serve food very quickly. At the same time, there are experiential brands, which can also be taken to many parts of the country. So I would say that you have to be very good as a brand. Your food has to be good, your experience has to be good, and you must be able to scale very consistently. These are the things which are very important for investors to see. The other one is, can we exit? So on a 7 to 12-year journey, is it possible for this company to exit wherever you're investing, either through an IPO or through a strategic M&A? These are the things which are very important because investors play with other people's money. They take money from institutions and investors, and then they need to invest, manage, and then provide a return to all the investors. So it becomes very important to see if there is an exit opportunity, only then, you would like to invest in a brand.
So, Hari, one of the things that you said is, are these brands able to scale, right? So very large number of brands, at least till date, looked at franchising as a certain way for them to scale. Good Flipping, on the other hand, eschewed that model and said that we're only going to look at company-owned, company-operated outlets, which is seemingly capital inefficient. What was the thinking behind that?
So there's nothing per se we have written down that we won't franchise or don't franchise. I think the opportunity that exists in the market today is to go after a segment of the burger market that we do. Being capital efficient and the return on the investment is what's important. So I think it's very important to ask yourself the question, why am I franchising? Am I franchising because I have lack of capital? Am I franchising because that's quicker? Am I franchising because I don't have the capabilities? So I think there is a room for franchising. I think historically there are a lot of brands from outside of India which we forget have sometimes over 50, 60 years. And even when they do come to India, they get a master franchise. So there are many perils in franchising, not least our legal system to be able to support, what if someone sells something other than a burger just to make a top line or bottom line, or feels XYZ or uses another ingredient. So I think overall today we try to stay away. We're still young in our journey. And because we have the capital to be able to grow on our own, we also see returns similarly, right? So if you're sharing revenue with a franchisee, your overall value proposition as a company diminishes. So I would say summarize it in 3 ways. Keeping the brand integrity, keeping it customer first, right? And the ability to wait, because franchise wants return in a certain time frame, whereas a brand might say, no, I'm not going to compromise on quality just because XYZ. So I think those are the 3 things, apart from, like I said, value creation, right?
Sorry, just,
I just wanted to add, point to franchising. India traditionally, we've seen many brands which have franchised, especially I'm looking at, Indian brands, but it has not worked very well for them, traditionally, which means investors typically do not like franchise brands. That was the type of situation earlier. But today things have changed very significantly, because today we have not only a franchisee operated, franchisee owned model, we also have a franchisee invested company operated model, which means the brand is able to hold on to its, basic things very strongly, whereas a franchisee is just like an investment partner who provides maybe some, help in terms of establishing and on an ongoing basis, and he gets a share of the revenue. So that model is working very well in India, because we've now got a new set of investors, double income, no kids. These people have a lot of money in the bank, and they don't mind, putting money into a good brand and feeling a part of, as a part owner of that brand. So this is a trend which I'm seeing now, which is catching up, and a lot of people have, especially, young couples, they now own several franchisees in cities.
yeah, that's a great point. So we have Amit Baga of Daryaganj Hospitality, who's also joining us. He was a little late, like fine dining restaurants usually
Bombay
are.
traffic. We underestimated the Bombay traffic.
But jokes aside, I think the next question was to you, so you're actually on time. So we were talking about investors and investor sentiment, and the question that I posed obviously to him, which you would have picked off, was letting go of franchising as an option, whether by choice or by design. Now, in your case though, scaling a legacy brand and giving it a new life and being able to work in a very different manner with those brands and create a fine dining concept was something only private equity would do, right? Like a couple of years back. Now you're one of those outliers who's done it at a venture capital stage, right? So what has been your conscious imperative?
So when we started the brand, which was about 6 years back, the idea came to me that I wanted to do an Indian restaurant brand, and then I had my friend Raghav Jaggi, whose grandfather had a legacy, had a history. He was alive, 94 years old that time, 6 years back. Unfortunately, he passed away next year, but he was 95. He lived his life. So I went up to him and said, let's revive your grandfather's legacy. And because I wanted a great story also. So from there, we were when we were starting off, we didn't think too much. We were like, okay, I want to start this brand and let's see how it goes. So when we started the first restaurant, which was just self-funded with me and Raghav and just us, we started it. It was a great response. It was like we started a small restaurant. On a Monday also there's 30 people waiting outside. And we are serving tea, we are serving lemonade to people waiting outside. And they come and tell me, why are you not opening more restaurants? So it just came out of a need from a demand from the customers that, okay, we should open more. So we signed a few more. And then slowly we started opening it, but we were keeping it between friends and family. We were not going out. Then the pandemic happened, then, we started delivery, then we came back, then from there on, things kept on going the next level because I also was evolving, I was understanding the market better, I was understanding, technology better, what's happening. So then came a point 2 years back when we were featured on Shark Tank. And that was a great publicity for us. I think imagine being aired on Sony prime time, 10 p.m., it was great publicity. The next day itself, we were like, 60% sales were up and we couldn't even handle the business coming in because we had only 5 restaurants that time. And so then came up about till now, from that time till now, 377 queries for franchise internationally in India. And imagine not even one we took. So that was a level of constraint we kept. So this is the show organized by Franchise India have to be kept. No, jokes apart. I think franchise works when the boundaries are very clear, like sir said here. I feel if the franchisee has to go and run the whole show themselves and they have to do everything themselves. So people came to me who said, we want a franchise, we'll not do everything ourselves. You just gave us your name, we'll do everything. I said, then why are you paying me this franchise fees? You want to pay me this certain big amount as a franchise, like a one-time franchise. We go and put it in marketing, make a new brand. That's what I said to them. So I feel that the way the future is, in India, people maybe also, the investors who want to take franchises need to be educated. That mindset is that if I buy a franchise, now I own this brand. I can do whatever they have to do this. So you have to understand there's a brand standards, there's a risk in everything. Every business every outlet might not be a success. So usually if anyone wants to take a franchise, they should first leave it to the brand to decide which location they should go to. If they decide, then they cannot say anything later that, it didn't work. The brand might say yes to it. So I feel the way to go in the future for franchising is a franchisee invested, company operated model only. And wherein the structure, in fact, we were working on it, but we've not done it yet. But the thing is, structure can be such that, the franchisee buys all the assets, all the infra, and gives it to the brand to operate. The brand operates everything. And there could be arrangement between which could be like a revenue share. It's like a reverse franchise. The franchisee usually gives a revenue share to the franchisor, the brand. It should be the other way around. The P&L should be owned by the brand. And the guy who comes and invests can get a certain percentage of the revenue depending on, different factors. So that's one thing, and I feel that we as a brand, we've restrained ourselves from doing that. And the idea was always to maintain the highest standards, maintain the highest level of service, everything. So I think that gets compromised. And because also we decided that if we are in Delhi NCR right now, we have not entered Bombay yet, we might do very soon. We've not entered South India yet. This is a reason, because we wanted to be stronger in Delhi NCR, make a corporate team there, which we have done. Then when we start into a new territory, we start building a bigger, a corporate team there as well. We opened Bangkok as an international market, which has done very well for us. And that also given us a confidence that we can manage even an international outlet now. So so I think it's very important for brands from their side to be very careful. It's very easy to get, carried away. Like I said, 377 franchisees said no to. It was very tough. Some people came to my house only, please give us a franchise. I said, no, sorry, we can't do that. So we have to be very, 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 careful.
Right. No, I think that's a good point, right? I think what does the brand stand for is really important, and how a franchise relationship really works, right? In terms of what flexibility are you allowing for them, what returns are you allowing for them. I think that's a careful decision that every restaurateur needs to make. That kind of brings me, when we're talking about brand, one of the things that I guess unites both of you is product, right? Now the alt to that, I guess, is Natasha, right? Who is building the business on a community-centered approach, right? Building around the experience of coffee itself, as compared to specifically talking about, retailing coffee. So Natasha, that must change a lot of the dynamics, right? Like in your role at Blondies. Can you try help us understand that?
So I think now when it comes to kind of when people are visiting restaurants, they're not only looking at the food and the coffee at the space, but they're actually looking at the experience, the way the space is designed, the service, how you're actually making it feel more collaborative. So I think one thing that Blondie did that really helped us was kind of when we started, we hosted a lot of events where we experimented our menus in different spaces, like whether it's wellness, whether it's fashion, whether it's art, and we really kind of understood what the consumer needs. And after that, actually, we created a WhatsApp chat just to kind of communicate these events, which soon turned into a 2,000 people community chat. So while we were building the space, we took people through building it, like all the bad and the good, and they felt very involved. So when they actually entered the space when we opened 7 months ago, they felt like they co-created it with us. So I think people now are looking for more of a feeling. And I think to kind of, when they come to your space, they want to associate it to a certain feeling, you know. So we're really trying to build that, and we're really trying to create that. Of course, while the product is key and consistency is key, I don't think that's the only thing that's bringing people back.
I think that's a great point as well. You know, the F&B industry is also defined by the experience and not just the product. To some extent, restaurants as a business, I think you are at the intersection of both. You are pushing out great product and you are pushing out the experience, right? So I think it's a good blend. That kind of brings me to one specific question.
Sorry to interrupt, but well, as far as our brand is concerned, experience is very important. In fact, I always say everyone about the 5 senses experience. What I was talking about was one of the experiences. So the sense of taste, the quality of the food, the service also comes in the sense of touch, you know, the fragrance we do, the whole vibe, everything is a part of the product actually. Product is not just not about food, the product is the whole experience.
Yeah, I'm not saying, you know, one against the other. I'm saying one being the most important in driving a business. Which, you know, brings me to a question to you, Hari. Now, you know, when you're looking at multiple businesses, which are very different, right? Like, so you have 3 businesses, very different business models, one in fine dining, one somewhere between casual dining and fine dining, and one in the QSR space. And you are looking at investing, right, into any of these companies. What do you look at? What are those specific things or specific qualities that you look at?
See, fine dining is literally a no, in the sense it's very tough to scale fine dining. You don't get the multiple. For example, if an investor is putting in 50 crores, he would expect to walk out with 500 crores. Now, that is possibly not doable with a fine dining brand because it takes quite a lot of time. Casual dining, yes, you know, we see fantastic execution by several brands in India, and they have all got global potential, including our friend here. You know, Indian food is still untapped in the global market, but QSR is the hottest space. Why? Because, you know, Domino's, KFC, all these people have shown what India can consume. So most investors like the QSR space, and you know, if you look at the food categories, you know, it's with the platforms also available. You know, if you can get your act together, you can scale very fast. And with the advantage of having platforms, today you just look at a screen and you see so many brands, right, on so many food, so many cuisines. You don't know from where the food is coming. So as long as there is a visible brand, it could be supplying it from the same kitchen. So that gives a lot of revenue enhancement potential for, you know, restaurants which are having a front end. At the back end, they are running other brands. So this is a model which many brands have started finding in order to increase their revenue because of the high cost of distribution. So I think, you know, QSR is a space. The clouds, for example, if you see the cloud brands, you know, many cloud brands have done something which is impossible for a physical brand to do. Right? So today we have cloud brands which are clocking 100 crores profitably a month. Right? So this would not have been possible for them to do with physical outlet because it would have taken them a long time. And they have multiple brands running in one single kitchen. So these type of business models are very interesting because we have not seen them before. And now with even the 10-minute delivery coming, you know, we see a new set of consumers who all want very fast delivery. And food is again adjusting to these type of demands. So I would say that anything which is disruptive, looks that you can create a category out of that, you know, is an investable proposition.
Right. Yeah, I think, you know, one of the things that actually defines QSR is scale, right? So one of the brands that has done that really well is obviously Good Flipping Burgers. It's been astronomical, the speed at which you've executed and then been able to, I think you're at 60, 70 right now. And you have built a product promise, right? Which is a burger. You've created a hero product and been able to push that product forward. But achieving scale requires something very different, right? It's not just a product because there are multiple sub 5 outlet brands in the country. Very few that have crossed that, and very few that have crossed, a 50 mark. What would you say you did differently while scaling that?
Yeah, I think, coming back to it, we're taking international, most of the time when we think of franchise, we think of international brands, and the reason they're able to cross borders is because they have so many set SOPs in place. So I think one of the things that, when we started out, we had two things in mind, right? One was whatever we're doing, we're building for scale, right? So whether you're setting an SOP in your kitchen, whether you're planning your supply chain, whether you're thinking about how you're going to train the person, you have that lens which basically comes through everything you do, right? And then sometimes, we always get asked, is your burger better than someone else's? And I say, maybe. There are a lot of better burgers out there, but can they do it across the country in the same way every time at scale? No, that's a different ball game altogether. So it depends on what you're going after. Having the lens of building it for scale is definitely one of the things. And the second one is the team that you're building, right? You cannot build, and that's part of building for scale, but you cannot really be a one person army, right? I think at some point of time, your ability to build a team that can scale, and thankfully with international brands that came in about 25, 30 years ago, a lot of the training provided by them is something that we are benefiting from today. So I think using that lens is something that's really important. As far as hero products are concerned, burgers being hero, actually every category that you go into burgers, if you look at us, Cluckinator is I think the most sold fried chicken burger in India, right? But you look at every category, whether it's fried chicken, veg, and you want to have a hero, right? And we have done that, and people look out, sometimes you won when they address it as the burger's name rather than the company's name. So, I think all brands around the world try to strive for that. We're lucky enough to be able to create a few of them, and that helps us.
Venture capital acknowledges scale, right? So you were one of the early ones to have built a product and then, raised venture capital. Tell me a little bit about what was difficult about that journey, right? I know, obviously in hindsight, it all looks like it went where it had to go, but what was difficult about that journey?
I think at every stage, right, Hari's done some fantastic investments really early on. So at every stage, what you're really looking to do is answer the question that investors are looking for, right? So very early on, we had HNIs invest, and then you move up the ladder to getting a larger check, and then final venture capital, and then maybe PE, and then you raise from the markets if you do an IPO. So each of those stages sort of ask one question, like Hari pointed to: what is the outcome that someone's looking to get, right? And if they can see that outcome is palatable at every level, and there is, a very understated but sometimes overstated thing, what is the size of the opportunity you're going after, right? I think that's a very important thing, right? So once people believe that the size of the opportunity is large enough, then it comes down to execution. Can me and my co-founders build out a team and execute this to where it needs to go to? I think those are the key things that is burgers a large enough market? Are the people that I'm investing into capable of executing that? If you answer those two questions fundamentally early on, I would say at this moment of time, there is people asking us different questions, but it fundamentally will always circle back to these two. And each level of investment that you get in terms of scaling will come back to this question: what here from now? Where do we go? If my capital of $1 comes in now, what is the return that I might look for from you? And are you the ones capable of delivering that to me?
Right. So, and complete alternate to your thesis, which is, India consumption, is Daryaganj, right? Which raised money to go global, right? To essentially also put it on the world map while expanding within India presence.
So, in fact, we not raised for the global expansion, just for so like the small amount was raised only for some other purposes. So, in fact, we are not aggressively going into the VC funding. Just to correct that, we just got some institutional investment from Anicut Capital, a small round, and that was something we did not. I mean, we just purposely did that to get a better oversight from someone like that, someone like Anicut Capital, because I feel that makes you more a professional, organized. So we are not running after any numbers or going after any VCs. We are a profitable company. I'm very happy to say today we built a company which is 100 crore revenue and a double-digit corporate EBITDA. So we really can grow on our own if we have to. So, but yes, if we do get a good strategic investor, someone who adds value, we are open to getting investment. So that's our philosophy. We don't really. In fact, I met Mr. Sanjeev Bikhchandani few weeks back, who's considered India's Warren Buffett. So I asked him, "What should I do?" He said, "You are profitable. Why do you need to go for funding? Keep growing slowly, and you can always manage to become a big brand without any funding." And he always says that go after the customer's money, not the investor's money, which means simply that focus on your customer to keep giving you that revenue, and he will be profitable. You will not need any investor's money then.
So,
Just a small one there. I think it's really important to point out, and it's very true. Profitability is something you kind of seek from day one. And we are a profitable company, but why you want to raise capital and is to move as quickly as you can to be able to cover market and status, right? So I think kind of capital that you acquire, if you grow profitably from your own accruals, the time you take to be 6 to 8% or 12% profitable at scale, I think that's what you're trying to compete. So the capital that you can grow out of your own capital, and that's the great way to do it. But what it does, capital infusion from the right kind of investor, it allows you to grow faster, right? You're going to take time to get to a 6 to 8% profitability at scale and beyond, right? So that's just something to keep in mind. But I connect so deeply that profitability, and sometimes when people say the word VC and investors, they mean money to burn, and that is definitely not a mindset that I would encourage any founder to take down.
So I wanted to make a few points. I think the market has changed very significantly. If you see, we have many traditional brands which have been operating for 25, 30 years. They are very good at what they do, but they have never been able to scale. So we don't have a single South Indian QSR which is nationally present. We don't have a single bakery which is a national brand. Many people say, oh, Theo Brahma is a national brand. No, they are not. They are only in a few places. So there is a huge amount of opportunity in India which cannot be done without investors' capital. So I would say that today investors have a lot of capital to provide to entrepreneurs. They're willing to wait and back them up. So any brand which has got to reach a very large, I would say, as a brand value, they really need to take investments to money. I'll just give you an example. 5 years ago, 100 crores was a very big sum for an Indian brand in the F&B industry. Today it is no longer there. Today the benchmark has gone to 1,000 crores because at least I know 5 companies which are just there, right? So 1,000 crores has become the benchmark, and you cannot build a 1,000 crore company, in 5 years unless you have investors' money. So, and not only that, there are good investors who really add value to what you are doing, because investors, if you take the right type of money from the right investor, they actually help you accelerate. They bring in a lot of connections. They bring in a lot of value to the brand itself. They help you not to make mistakes which typically you would make on a lonely journey. So I would say that investors play a very important role, and India is, I would still say that we're just scratching the surface. if you look at the US market in terms of the number of retail outlets that they have for the top 10 brands, they would have 50,000 retail outlets. If in India, if you take the top 10 brands, we just have 10,000 outlets compared to a population which is 4 times the size. So I would say India has got a phenomenal opportunity to go, especially for all these people. And investors are absolutely a very important vehicle there to help you scale and grow.
Could be having a good strategic investor who can actually guide you, who has experience, who can, really have the knowledge. You don't just get money, you get some knowledge out of some guidance with that. So that should be the reasons. And funding should not be taken only to fund losses ever, that's for sure. You see, in the first 6 to 8, 1 year of a brand starting, they could be negative for, in their P&L, but we have to ensure that there has to be a path to profitability within the first 1 year. You cannot be having a brand which is making losses year on year. I mean, at least for restaurant industry, you can. In tech companies, there is a possibility because there is a growth which will come at a certain point of time. Like today, AI people are burning trillions, but they know sometime it will pay off. But then that is AI. It's not in our industry. We need to be profitable on a unit level for sure, and now it's also corporate level. You cannot be burning money at any level. That's what's important.
No, that's pretty interesting. Now with Natasha, I think it's a very different kind of equation, right? So it's come and spun out of Bastion, which already has built a strong name. Obviously, profitability or top line numbers, while they're important, a lot of your business model is designed around patronship, right? Which is essentially people coming back again and again. What kind of metrics would you have to establish when you made a case for why Blondies is successful or not successful? What kind of metrics would you have had to establish?
So I think when we were starting out as well, first the product was key. We were really trying to tap into an audience where we were trying to make people take coffee more seriously, and as well as when we started offering different things, basically it's constantly evolving while consumers are evolving, but also kind of keeping your brand foundation the same. So I think when it comes to metrics, I was really looking at the product, the experience, the service, and also the experience the space creates. So from the simplest of things, I think one thing Blondie really does take seriously is the attention to detail. And when it comes to what he said as well, when it comes to SOPs, right, that was something that we really, really took seriously as we started, and the kind of trainings we did for the team, because I think when people go to a cafe, they look for a knowledgeable barista, they look for someone to kind of talk to them, take them through the experience, take them through the products, because that's the only way people will get more and more educated in the coffee and now matcha space, which is blowing up. Also, Blondie's menu offerings are unlike any other cafe. When you look at a bene dosa with a twist, right? It's a product that hasn't been created before. We're doing it with a twist. So we do an avocado bene dosa, for example, or a prawn thecha dosa. So it's we're really trying to kind of tap into a space where people feel like they're comfortable, but then they're always experimenting. And given, I think, like you said, right, I think Blondie does not resist change. We're constantly evolving, and luckily we have the kind of space to experiment and to constantly change our offerings based on what people are liking, what we are liking, and also kind of constantly staying close to our brand ethos.
The specific thing that I wanted to ask you, Hari, obviously considering that most of the people here are restaurateurs themselves, how do you think investing in this space is going to change in 2026?
See, I personally think that we will have many more franchisee investors who will not take equity in the company, but who will take a share of the revenue. So if you have money, if you put the money in the bank, you just get maybe 6, 7, 8%. But today there are many brands which are offering a 12% minimum guarantee, and on top of that they are giving you a size of the revenue. Now these models are working very well for founders who are not able to raise money. They have got traction, but they are not able to raise money. So for example, if you take Burma, they took 7, 8 years to raise their first round. And by that time, they only had 7 restaurants. Today, they have 20 restaurants and another 3 are kicking in. And this has happened in the last 3 years with investors' money. So they could have gone the franchisee route and they could have done it, but they chose to do it the way they want to do it. So this is one thing which I see, that there are more and more franchisee investments which will be coming, which is not equity investment, but a way of financing and getting return on investment. This is a very different type of investor. The other thing I see is, for example, if you take the burger as a category, we have McDonald's, we have got Burger King, we have got KFC, these people are selling burgers. But if you see Indian brands like Good Flipping Burger and many, we already have maybe more than 500 outlets, which is much bigger than Burger King. And today Burger King is a loss-making company and has got a market cap of 3,000-4,000 crores. So there will be operators who will come and aggregate all the burger brands and they will create a very large burger brand. That's my belief, that they can operate in multiple categories, which means at a very low level, 30-40 rupees burger, at the same time 1,000 rupee burger. They can create multiple brands which can serve the palate of every burger person, right? Because burgers, people who are eating normal burgers today, they want to have good flipping, some gourmet burgers. So I see phenomenal opportunity because people are never going to stop eating. So this is an infinite business possibility, and we will see more and more smart entrepreneurs coming, smart operators coming, who will do things in a very different way. So I do see a lot of adventure, a lot of excitement which is going to happen in this space.
So thanks, Hari. It's very promising to know that this activity is going to continue into the next year. Now, I hope you guys were able to get a